Hello everyone, Kevin here. And we're witnessing a growing trend where millions of Americans are considering returning their cars to their lenders. And why is this happening? Well, it's because many of them paid 10, 20, 30, or even 50% over the sticker price for these vehicles when they really shouldn't have. Finding an affordable new car has become more challenging than ever. In the United States, the average cost of a new vehicle is a staggering $48,000, and often the loan amount exceeds the car's actual value. And this has made car ownership increasingly difficult for a significant portion of the population. Now, I can remember exactly when car prices and values were going up and up and up. And you guys probably remember it too, where dealerships were offering you more than you paid for your used vehicle to trade it in. And I knew that this was not going to end up well or last very long. And ultimately at that time, we decided to make some strategic moves with our own vehicles before the hammer dropped. And here we are today, folks, and we are witnessing the fallout, the backlash of some of these predatory lending practices and shuffling money and kicking the can down the road, which ultimately at some point in time, the bill comes due. Now, borrowers are falling behind on their payments at a rate not seen since 1994, and they're questioning why they should continue paying $50,000 for a car that's now only worth 25 or 30 grand. The situation is becoming alarming, and the Google Trends data indicates a surge in interest in the search term give back car. Now, this is reminiscent of the financial crisis in 2008 to 2010, the last crash. The primary reason for this predicament is that the average American has a car loan that's roughly 125% of their vehicle's value. The banks, I don't think, are still doing this anymore. I think they are more closer to 100% or maybe even 95, 90 or 80%, which basically means that now if you want to finance a vehicle, you're going to need to put 5% up to 20% down. And if it's a $50,000 vehicle, well, 20% would be $10,000. So just putting it out there. Okay. Now, additionally, they rolled taxes, tags, and other fees into the loan. These warranty charges, these paint protections, these, all the added dealer fees or protections or programs that they offer to you in the back room and finance. They rolled all that into the loan as well. Not only that, but also more than likely, in some instances, negative equity on some of the trade-ins. Now, this resulting in substantially higher monthly payments than normal, than average. And with inflation on the rise, many are reevaluating their expenses and looking to eliminate these hefty car payments. I can tell you right now that my email inbox is just completely full of requests from potential new clients trying to figure out how to get in a much better financial position. And it has only increased over time. The whole shape of our economy is changing for sure. But now, and I'm hearing more about the stimulus money and stimulus payments and stimulus savings being depleted. But now it's just becoming more and more evident. But I really think that it has a lot more to do with the student loan repayments in conjunction with a variety of other reasons, changes in the housing market, higher interest rates, higher mortgages. In some parts of the country, rent prices are going up. Mostly all insurance, auto and homeowners insurance is increasing. And it's almost, there's really no breathing room left, okay? On top of the employment situation and the income situation and how a lot of companies are looking to cut their staff, but also find ways of reducing their employee compensation. So yeah, it's a perfect storm scenario or situation that it's anything but perfect, but you get the point. So in the end, the consequences of this trend are hitting the automotive market really, really hard. We're on the tail end of I believe the United Auto Workers Union strike negotiations, which is good news because just yesterday we were able to pick up a loaner vehicle from the dealership, and there is a hopeful, positive likelihood and scenario that we will receive the parts we need to repair the Jeep and replace the differential or essentially the entire rear axle, because they're just going to swap everything out because they are now able to order parts from the manufacturer and not have to barter and negotiate with other dealerships or even other countries, because they were reaching out to dealerships in Canada for the parts. But it's hitting the automakers like a tsunami, and we're going to delve into the details shortly. And really quick, if you appreciate this information, just please hit the like button as it helps to share this content and educate more people about the current situation. Now, let's compare the car market to 2008. Back then, used car prices were significantly lower, and the average cost of a new car was around $23,441. Fast forward to today, and the average new car costs 48 grand, while wages have not kept pace with these price increases. Living standards in America are eroding, and we seem to be in a silent economic depression. Although they don't want to call it a recession, you and I know the truth. What's coming next is a wave of defaults as people reassess their financial priorities. They'll be juggling various bills, and unfortunately, some creditors may not get paid. This crisis isn't limited to the auto industry. It will impact credit cards, home loans, and more. Everyone will be closely watching the auto industry's response and will likely set the tone for lending and underwriting standards moving forward. Auto loan delinquency rates have reached their highest point since '94, and it appears that we might be heading towards the most significant car collapse in all of U.S. history. So if you're looking for a job, being a repo truck driver may be a great opportunity. Major automotive companies like GM, Ford, Chevy, and Tesla are slashing prices to stimulate sales. And when the massive crashing wave from this tsunami of defaults hits, dealers and lenders will likely follow suit. But I don't think it's the prices that really are the hindrance. It's everything else on top of the higher interest rates as well and the stricter lending practices. I was actually having a conversation yesterday with somebody, and we were discussing future possible scenarios and how underwriters and lenders may begin to dig a little bit deeper, not only into income verification, but employer verification, and then analyze and scrutinize the employer for the likelihood of them potentially going bankrupt and thus ending your ability to repay because you work for them. So how can people cope with this crisis? They have three options: make more money, return the car, or cut expenses. Now, there's no magic solution. Many people will struggle to increase their income or reduce expenses, making returning the car a more than likely only choice and high probability for many. New data reveals that more people than ever are falling behind on their car payments, and millions are at risk of having their vehicles repossessed. Now, this is a crisis that will impact not only the automotive market, but also the job market, the real estate market, and lending standards, as we mentioned already. As auto-related problems unfold, we'll likely see a significant shift in credit access and lending practices, making it much harder to gain access to borrowing money. In addition to the car market crisis, there's another crisis brewing related to student loans, as we mentioned earlier. Millions of Americans are facing student loan debt, and the situation is dire. A recent video showed a person who had paid over $120,000 on an $80,000 loan over 10 years and still owed $76,000. Now, this has left many people frustrated and uncertain about their financial future. The government is considering garnishing Social Security benefits for those who default on their student loans, as well as taking other drastic measures. And as this situation unfolds, it's essential to stay informed and consider how it may impact your own financial decisions. Subscribe to the channel, it's free, and the information that I share with you every day is designed to help you prepare. Now, the bottom line is that we are facing significant financial challenges in the auto market and beyond, and it's crucial to stay prepared and informed about how these changes may affect your financial stability. Thank you guys for watching, and I'll see you next time. Take care, be safe, and remember, you're watching Kevin.
I can tell you my problems, meditating my silence, but I keep pushing my pen, rotating my stylus. Brokenness feeling like sin, now no breath, low dollar. Used to be left on red, now all the girls go holler. Now all the girls go follow, all the fake friends gon' pop.